Adesoji, the banking sector down over 30%, really underperforming the overall market, which is also depressed for the year to date. Why are investors still so wary of investing in the banking sector?
Morning, Samantha. It's less about investors not just wanting to invest in Nigerian banks. Okay, this is a broad market negative sentiment. So you have the Nigerian market itself down by about 19% year to date. Okay, you have negative global sentiment, which continues to feed through to the Nigerian market. Okay, even locally, there's just no marginal buyer for equities at this point in time. Okay, so even for the banks and the non-financials themselves, okay, there's just no momentum to take this valuations higher than where they are today. However, if anything at all, from my recent discussion with local investors, okay, if there are recent going back to looking at Nigerian equities, anything to go by, they're increasingly beginning to see opportunities in equities at this point in time, especially the banks. Okay, because you have a situation where dividend yields, are knocking on 9 to 10% currently, and this sits evenly well with 1 to 3 year government securities.
So there are some
yields
signs that
on
investors
equities are very attractive.
There are some signs that investors are starting to now come to the market and pick up those heavily discounted banks.
Exactly. So there's quite a lot of bottom fishing happening. If you look at the volumes traded this week, you actually see that for quite a number of the banks, UBA, GTB, a couple of the top banks, huge volumes have traded hands. Some people are selling, but definitely someone is picking those stocks up at this current prices. So definitely some bottom fishing is happening in the market today.
There was an article today that I was reading saying that perhaps management of these top-tier banks should be looking at share buybacks in order to boost the stock prices there. Is this something that happens in Nigeria? And do you think that this could be a welcome strategy?
Share buybacks, in the local market, there's just one popular one that was done by Custodian and Allied. Okay, it's not been a practice that Nigerian listed companies have openly embraced. Part of that could be local, or should I say historical reasons. It's just not been a practice in the Nigerian market. However, the attractiveness of share buybacks are apparent. But like I said, history and should I say cultural factors are probably hindering those activities happening in the market today.
Let's move our focus to the banking sector and, of course, M&A activity with that 30th September deadline on Friday. Intercontinental and Access shareholders deal has been approved. Today, the focus on Sterling and ETB. What exactly needs to be approved for this deal? Okay,
the Sterling ETB deal was the last major deal to be announced that these banks are going to combine. Effectively, you have a situation where Sterling Bank is acquiring a bank which had positive equity. ETB had positive equity of about 8-9 billion as at the point when the discussion was happening. So it's less about AMCON recapitalizing this bank to zero and more about Sterling Bank recapitalizing this bank to the required capital adequacy level and merging it into a bigger institution. So the dilutive impact from this deal is about 20-25% on Sterling Bank, where effectively Sterling Bank is acquiring a bank which had positive equity, according to management.
What type of banking entity is likely to emerge if the Sterling shareholders approve this buyout?
Okay, you have a Sterling Bank and an ETB today, which are both third-tier banks by our rankings. Okay, effectively, these banks coming together, you have a bank with about 188 branches post-deal. You have an institution which moves into the tier 2 bracket, and not just at the low end of the tier 2, is to sit comfortably well in the mid space of the tier 2 banks. So it's a bigger institution, but definitely that a lot of the attractiveness of the ETB franchise lies with, should I say, their business or historical relationship with the deals of the companies owned by the largest shareholder in there, so Globalcom, Cornwell. And I think those are large cash flow generating businesses. So I think that's the key attraction for ETB to Sterling Bank today in this transaction.
Now, a deal that is most liked by the analysts I've spoken to is FCMB and Finbank. Are those meetings taking place between shareholders of those banks tomorrow? What is likely to transpire out of that? Are we expected to get the green light from shareholders on both sides?
If you look at how the meetings over the past 2 days have gone, Intercontinental shareholders approved 100%. Oceanic shareholders approved almost 100%, 99% plus. So I think it's almost a situation where these approvals are very likely going to happen. So I'm not pessimistic about these deals going through. I expect them to happen. So I think that's on one side. However, for FCMB, Finbank, Finbank shareholders have an arbitrage opportunity in here. Okay, and I'll explain that shortly. That draws from the fact that the transaction price for FCMB was based on a 6 naira 16 kobo pricing for FCMB. However, current FCMB share price is 3 naira 73 kobo thereabouts. So it actually pays Finbank shareholders to sell, because they have the opportunity to sell to FCMB at based on the 6 naira price. So sell to FCMB at that price and buy back on the stock exchange. So there's a clear arbitrage opportunity for Finbank shareholders.
Yeah.
However, the eventual stake they'll have in the bank should range from between 1.5%, and if they do this kind of transaction I just mentioned about, it'll probably go up to higher than 2%. So the arbitrage opportunity in that deal, or should I say, favors Finbank shareholders. So it pays them to sell to FCMB, in my view.
Adesoji, very quickly, what is the next key benchmark for the Nigerian banking sector?
M&A, talk of M&A goes out of the way. The next key thing would be the removal of the interbank guarantees by 30th, by end of 2011. Okay, and from that viewpoint, the key dynamic or the key thing that'll be changing is in terms of money markets and yields. Okay, and how banks and in the interbank market risk is priced. I think that's the key next benchmark to watch. Yeah. Okay, so the banking sector moves beyond 30th of December. And you have a better pricing for counterparty risk in the market.